Welcome to The Explainer. There is a pretty good chance you've used Uber sometime this week, maybe even today. But behind that simple app on your phone is a global business making some absolutely huge moves. And its latest quarterly report, well, it really tells a story of incredible growth and confidence. So we've broken down all the key numbers and insights for you. Let's dive right in.
Okay, but before we jump in, we've got to cover the important legal stuff. This explainer is for informational purposes only. It is not financial advice. All right, let's start with the headline number, $12.65 billion. I mean, think about that. That's what Uber pulled in just 3 months. But, a big number is just a big number. The real story here is how they hit it and what it lets them do now. So yeah, this was a huge quarter for Uber. But why? In the next few minutes, we're going to break down exactly what drove that performance. We'll look at this massive bet Uber's making on itself, and then we'll see what the analysts think is coming next. So that $12.65 billion, where did it come from? Say, context is everything. This wasn't just a solid quarter. It represents an 18% jump in revenue from this time last year. And for a company the size of Uber, that's not just growth, that's some serious acceleration. And it wasn't just them feeling good about themselves. No, they absolutely smashed Wall Street's predictions. We're talking $225 million more than analysts were expecting. When you beat the market's expectations by that much, it definitely gets people's attention. It's a huge signal of strength. Okay, so revenue's up, but what about actual profit? Well, this number here is the earnings per share, or EPS. And at 62 cents, Uber came in right on the money, exactly what Wall Street was looking for. And this is actually a really important detail, because while their revenue just shot past expectations, they also proved they can manage their costs and deliver predictable, stable profits. That's the sign of a business that's really maturing. So, your revenue is soaring, your profits are solid. What do you do with all that firepower? Well, you make a really big, really confident move. And believe me, what Uber announced next, it was massive. That's not a typo. $20 billion. That is the size of Uber's new stock buyback program. It's just a mind-boggling number, and it's a huge vote of confidence. But what even is a stock buyback? And what does it mean for the company and for investors? Right, so think of it like this. The company is literally taking its own cash, going out onto the stock market and buying its own shares. It's basically them saying, hey, of all the places we could put our money right now, we think our own stock is the absolute best bet. And by doing that, they reduce the total number of shares out there, which can make the remaining ones more valuable. It's a really powerful signal to the market. Okay, so after a quarter that strong and a move that bold, everyone's wondering the same thing. What's next? So what is Uber actually telling the market to expect for the rest of the year?
Well, the short answer is more of the same. The company is forecasting continued strong growth. They're projecting that gross bookings, and that's just the total dollar amount people spend on rides and deliveries, will keep growing in the high teens. And maybe even more importantly, they're expecting a key profit metric called EBITDA to grow somewhere in the low to mid 30% range. So in plain English, they're signaling that both the growth and the profits are going to keep on rolling.
All right, so that's the story coming from inside Uber HQ. But what about the outside experts? What are they saying? Let's take a look at how one particular analyst is telling their clients to approach this.
So this analyst is kind of looking at two things at the same time. First, their long-term price target for Uber is still a very optimistic $110 a share. But they're also realistic. They're admitting that, if the whole market takes a hit, it could drag Uber stock down with it for a bit. And if that happens, they're flagging a price around $76 as a potentially really attractive time to get in, especially for anyone who believes in that long-term $110 story.
And really, that kind of brings us to the central question here, doesn't it? On one side, you've got a company that is just firing on all cylinders, so confident that it's betting billions of dollars on itself. But on the other side, you've got this shadow of bigger market worries hanging over everything. So the real question for you to think about is, does all this signal a huge moment of opportunity, or is it maybe a time to be a little more cautious? That's really the core puzzle here. And that's the breakdown of Uber's monster Q2. Hey, if you found this explainer helpful, the best way you can support us is to just hit that like button and subscribe. It honestly helps us a ton and lets us make more of these for you.